Hi traders, Crispin here from FX Trader. It is Friday the 15th of November 2019 and this is part 8 of our support and resistance 0 to hero video series. So yesterday, in part 7, we looked at putting all this support and resistance data together so that we could essentially plan an automated trade from a trend line. And if you look at part 7, you'll see I drew a kind of a green trigger area around here. What happened is obviously several hours passed by overnight, and indeed we saw price action come down into our trigger zone, which I'm just going to highlight that for you there. And you saw our entry, it was almost perfect. In fact, we got virtually no drawdown from our entry point at all, so that worked out quite nicely. I think that was set either 2 or 3 pips above our trend line, and we got filled. And if you look down here, in the comments it's saying long touch, so that means long obviously is a buy trade, and touch means that's the trading behavior used, which correlates with our trading behavior here on the trend line. It was a half a lot position. Since the trade's been opened, obviously the system has automatically set our stops. You see our take profit level is set at spot 28.98 and our stop loss is at 128.510. So we'll just have a look at what those actually equate to in pip terms. So running a stop at about 17 pips, and our take profit level is about 29 pips or so. So not quite 2-to-1 risk reward, but we're okay with that. We're in profit at the moment. It's been wobbling around basically between our entry point and yesterday's high. So on our entry bar, we saw basically tick down and went up 20 odd pips. If you were kind of a bit worried about this and you thought I'm going to take some profit out, you might want to move your take profit level out, or move the take profit level to yesterday's high if you think it's going to stay range bound, or on a breakout of that you may see it go up to test our weekly R1 pivot level, which is also a confluence with some previous price derived resistance, which we've got here on this red line, which we've talked about in previous videos, and also that links up quite nicely with R1. So this area here, which is about a 5 or 6 pip area, could be a good place to take some profits out, assuming we get a break of yesterday's high, and it looks like that could possibly happen. I haven't checked the economic data releases. This is just a demo account. I'm just using this for demonstration purposes. So summary: trade was executed within the trigger channel. Take profit levels were automatically set with stop loss levels as well. The beauty of this is obviously we didn't have to sit around waiting for the market to come to us. We set up our automated trade yesterday, and then several hours passed by and we just left the system to its own devices. And actually I was recording or doing some video editing this morning when I saw price action come down and test our trigger level. Some may say, well, it's a flat trend line, you could easily just use the pending order. Yeah, that's absolutely true. No, there's no argument with that whatsoever. But what I'm going to do in the next videos is start talking about how you can use Trendline Trader Pro to automate all kinds of trading behaviors to suit different market conditions. So that will be in part 8. But that's a quick recap in terms of putting all this stuff together and enabling a trader to set automated trend lines remotely, as in you don't need to be there, you can just leave your MT4 account running and go and do something else. I think a lot of the time, certainly when you first start trading, you just want to be in the market, you're eager to get in and you start chasing price. So yesterday when we saw this price break through this swing high here, you could have chased it up, you might have entered around here and you'd have a very marginal profit. It's much better to let price action come back and retest those previous resistance levels, which end up becoming support. And so our entry there had virtually no drawdown. We haven't seen any real drawdown situations since that trade opened. That's a better way to play it. Be patient, let the market come to your levels, sit it out. Book Dirk du Toit called Bird Watching in Lion Country. In fact, it wasn't that book. It was another book by, I think, I can't remember who wrote it now, but there's a very interesting chapter in there about, it was an analogy about being as patient as a cat, and you've got to stalk your prey like a cat does. So it sounds a bit of a cliche, but you are much better off just basically being very, very patient and waiting for price action to test your predefined entry points. In the same way, let it run, let it go to its logical take profit level. Assuming you know what you're doing and assuming you've set your levels correctly, taking into consideration support and resistance, and also economic data releases which can move the market significantly and push it beyond the technical support and resistance levels. So think about it, work on a plan, and be patient. And patience and not over trading are going to be a major factor in your profitability long term. I hope that helps.